All right, good morning, ladies and gentlemen. Today is Wednesday, November 8th, 2023, and I'm back with another edition of the Wednesday Live Show. And last week when I was on, as you recall, it was Fed announcement day, and as expected, they held rates unchanged. And of course, the big debate is whether they're done, and that seems to be the consensus that they're done raising interest rates. However, they left the window open for another rate hike. I'd be I'd be kind of surprised if they did another rate hike in December, ahead of Christmas and all that and the holidays. So they have one more meeting this year, and so there's I forget, like a 30% chance that maybe they'll raise in January. At least that's what the market's pricing in. But as you recall, the market was pricing in a pivot several times last year where they thought, yeah, the Fed's going to cut rates anytime now. So, um, the big thing is inflation, obviously. And the funny thing about it is you almost have to go back to a time before, when I was young and didn't pay attention to this stuff. But you got to go back to the 70s to kind of find, the last time that inflation went crazy and the Fed had to embark on a big rate hike cycle to quell inflation. And so, anyway, yeah, I don't remember it. Be honest with you, I had other things on my mind because back in the 70s I was a kid. So, but anyhow, there were periods of inflation where they raised interest rates and they thought they had it under control, and then you get another wave of inflation, right? And so, anyway, we're in uncharted territory as far as that goes. Everybody knows that the general price level of stuff has gone up drastically, and that's creating a lot of hardships. And so, I mean, it all boils down to it's the Fed's fault to begin with. So they went absolutely crazy during the pandemic, and that is what basically, that is inflation is the result of what they did. Something like 40% of all the U.S. dollars that exist were created in the last few years. So, and I mean, it's ridiculous because everybody knows. I mean, you go back to history books, the beginning of time, everybody knows that when you create more money out of thin air, you put more money into circulation, the net result of that is inflation. And so, they try to blame it on the pandemic and supply chains and all this kind of stuff, but in reality, it's their fault. And so, I don't know what they expected to happen, but hey, who knows? It's like the 2008 bailouts. You can speculate about what would have happened if they didn't bail everything out, with the economy had collapsed. So, it was the same thing during the pandemic and the lockdowns. But anyways, they created, trillions of dollars, 6, 7 trillion, something like that, and they slashed interest rates and held them at zero. And then, that this bout of inflation, and so now we're all paying for it, right? The price of everything, the general price level has gone up dramatically. And the crazy thing is that when inflation, goes back to 2%, the price that doesn't mean the prices come down, right? And so that's what everybody misses, is because when they talk about inflation, it's almost like a word play. They say, "Oh, inflation's coming down," and what the average person hears, that's not an economist, what they hear is that prices are coming down, but the damage is already done. To be honest with you, and so if inflation was 0%, that just means that they're not going to raise. They haven't raised the prices in a while. So there's certain things that I buy that and the other crazy thing is like health insurance premiums and all that. So anyway, all that aside, I got into my little inflation rant based on the fact that the Fed thinks that they think And you wonder if it's a result of them raising interest rates or if it's just a naturally occurring type of thing. But anyway, I thought we'd start today by looking at the big picture because the other crazy thing that happened last week is that the S&P rallied like 6%, right? Huge rally. Um, One of the biggest rallies we've seen in ages, and it's kind of crazy. It's like a breakaway. It was like a breakaway gap. We'll see on the daily chart here, but the first thing to notice is on this weekly chart, basically, last week just kind of retraced where it came from. Here's the big gigantic overhead resistance, right? From the all-time highs to last summer's highs. Here's a couple of lines we talked about last week. One, if you're using candlesticks, this red line might have been the appropriate uptrend line, drawn across like the lowest lows. So we managed to, interestingly enough, the market found support right smack on that trend line. I mean, it just poked it, and then that rally started. So let's go to here we go. This chart's getting a little messy now, but my major support and resistance. Interestingly enough, I mean, it broke down below resistance, right? There's the 200-day moving average. There was it broke down below support. So, in theory, and it found some support there for a little bit, but there was that little sort of shakeout. So, in theory, like 4,100, but this is crazy. I mean, it went from 4,400 to 4,100, and basically back to 4,400. It's close, right? In a short amount of time, and so that's some pretty crazy price action right there. To be honest with you. I don't know that this line is even relevant anymore, so I'm gonna get rid of that. It's gonna force me to save this chart again, but I'm trying to clean it up a little bit. So, is this still a viable area of support? Yeah, I suppose it is. I guess I could drag it all the way down here, but that doesn't really even matter at this point. In the near term, you saw on the weekly chart, this overhead trend line is a lot higher, but in the very near term, for one thing, you can't see this on the chart, but I'll pull it up, is the RSI. We talked about the RSI a couple of times, and it's not as, I don't want to mess up my charts, but you can see how the RSI kind of got buried down there, got down to 20 or 30, whatever that line is. I'm not a huge fan of these charts for some certain reasons, but anyway, you can see the RSI got way oversold, and I mean that sell-off was brutal. It was fast and it was brutal, and it seemed like the market went down every day, and then we literally got the opposite reaction. Right back to where it came from. So be interesting to see if it forms some sort of like an inverse head and shoulders here, right? That's almost what I would expect. I think the market's been up like 7 days in a row or something now, and it's just barely up today. Today's anybody's guess. We've got a really sort of narrow range open here, and so, but all these up days in a row, but these breakaway gaps were pretty amazing, quite frankly, and it's very unusual. It is to some degree. Honestly, the weekly chart, when you look at it on the weekly chart, let me zoom in here. It's not really that. I mean, they like to talk about percentages and all that, and yeah, sure, it was a huge rally. It was, but there's other spots on the chart where you had sell-offs, and then like this took 2 weeks to have a rally like we just saw, and back over here, you put these 2 weeks together, You put a couple of weeks together on some of these rallies in the past. There's another one right off of the all-time highs. We sold down, and this was, Russia invades Ukraine type thing, and we got kind of oversold and had that monstrous rally right there that you can see that particular week. It almost looks like a bigger rally than we just had, but anyway, you can see that a couple weeks it failed and then went back and made lows. So basically, we've kind of come right back to the market's come right back to where it was before that little bit of a sell-off. And so I think there was a lot of short covering. That's what I think. And this all basically happened right after Powell's speech. So let me just go to my clean chart here. So yeah, after Powell's speech, market just took off. And once it started taking off, and I read stuff that said that hedge funds were the most underinvested they've been in a long time, and everybody was bearish and this and that, and rightfully so after that pretty significant sell-off there. And so anyway, it seems like right around this area here, right around, there's a gap here, by the way, which you can see on, if I change this to SPY, that gap's pretty close to getting filled. Let's see. It is, interesting. It's like today's high. Today's high, is right at this low right here. You see that? So, which also matches up with that high from back in October. And so the market, this would be sort of obviously a couple of pixels here and there doesn't mean anything, but this would be a pretty obvious spot for the market to sort of run into some near-term resistance, just based on this is 920. There was that gap down there, and I'm not even sure that I remember what that was all about. So anyhow, there's the downtrend line across these highs. Let me put that on there just for the fun of it, since we're looking at this chart. So this is the next, besides that gap and sort of the area we are now on the S&P or SPY, this is the next sort of major area of resistance. That's the big trend line. And hey, just because it rallied like that doesn't necessarily mean that it can't push straight to that trend line. But I would expect, and just based on what I've seen the past couple days, we've seen a few narrow range days here. Like we had these breakaway gaps in this big run, and then we're starting to get some like narrow range looking days, a little bit of consolidation, and so it wouldn't be a big surprise. There's the 50-day moving average. What's crazy about this is that it broke below the 200-day moving average, and that was like a super big deal. And then everybody, it didn't really feel like capitulation. Back in the old days, you'd get a sell-off like this, and then you'd get like a crazy sort of high volume capitulation day, and then you'd get a little bit of a reversal. But we were kind of like right on the edge of extreme fear, it felt like, and and rightfully so, because all this kind of coincides with all this turmoil in the Middle East, and and what's kind of bugging me here, I mean, the chart's relatively constructive. If you go back to the weekly chart, we talked about this being potentially a big giant, like sort of cup and handle type of thing, right? Big cup and handle, and the Qs actually have a pretty constructive pattern here, right? If you look at the NASDAQ 100, which of course, we all know that it's the Magnificent Seven holding this market up. And so this right here, this is your big cup and your handle, and it's broken out of this channel here. And so theoretically, and of course, like I mentioned before, we're in, historically speaking, this is one of the strongest times of the year, right? um, as we get into November now through the end of the year. I mean, sure, there might be, there'll be some down days in that, but over, many, many years, this is when you start to see, some real action, especially in the small cap stocks, which, quite frankly, let me find my IWM chart here. So anyway, the Nasdaq 100 is extremely constructive from, a purely objective point when it comes to the chart, but if you think about it, if you try and think about it too hard, what you realize is that, stocks are. I saw a chart the other day that was the Nasdaq, like the Magnificent Seven and the Nasdaq 100 and tech stocks in general are like compared to the rest of the market, and we know it's a narrow market, but compared to the S&P, like the valuations have never been higher, even during the dot-com bubble, right? So there's all kinds of crazy stuff like that. Um, Russell 2000, look at that. There's the long-term chart, and it's just really, really uncanny, sort of. Let me zoom into just this area here. Yeah, it's this support and resistance, this channel here that it seems to be zigzagging up and down in this channel is just uncanny. It really is. And I'm sure you guys remember when I drew this originally, we were up here, right? And we talked about how, I drew like this little zone of resistance and we were up here, and it was kind of amazing, quite frankly. And then I don't think anybody expected it to go all the way back down to the very bottom. I certainly didn't. I mean, you could tell there was resistance that it was going to run into, and so you would think, well, maybe it's going to pull back a little bit or whatever. But a trip, the summer highs. This was like August. From August to November, basically, you took the small caps took a trip all the way back down there, which quite frankly, I mean, look at these lows. There was the October low in the overall market there, and so pretty outrageous. And so it managed to bounce here. Look at these two moving averages, the 50-day and the 200-day. The old what is it called, the golden cross and the death cross. So you had a golden cross here, and then you had a death cross here, and then you had a golden cross here, and then you had a death cross there. And so you can see that that those particular things wouldn't have been very useful in trading this thing, other than the fact that, as soon as you got, shortly after the golden cross, you hit the high, and vice versa. So anyway, it'll be interesting to see what the small caps do and whether the rally broadens out. The other thing I've been noticing is, and I want to pull up a chart. I'm just picking sort of random stocks. Random sort of stocks. Let me go to a weekly chart here. I like to look at longer term charts because you don't really get as much perspective, say, from daily charts. There's a lot of noise on the daily charts, and so, I mean, obviously, if you're looking at, what you think is going to happen in the very, very short term, the daily charts to go to. But I've been looking at a lot of weekly and monthly charts, and it's a real eye opener, right? So here's Disney, which is reporting after the bell, and I mean, geez, you go back, you take a look at where it is now, and you go back in time, like back here, right? This is Disney's trading at the same price it was in 2014. Was that like 9 years or something? That's just crazy. And so, it seems to me, just based on what the price is now, I have no idea, what's going to happen after earnings. And so, maybe this sort of sell-off is coming to an end, and maybe you get a turn up here, but you can see a couple of, humongous rallies over the past couple of years. But the bigger picture is that I mean, it's just amazing, that you take what would, they used to call them blue chip stocks. And so here's the thing is, they talk about a stock picker's market and that, but imagine how many times that, well, imagine how many funds or whatever bought Disney over the last, 14 years that paid a higher price than it is now. So it's amazing. And, these are not, here's Target. I was looking through a bunch of charts on the weeklies and monthlies. I mean, look at Target here. You would think that with, the market, as they say, within spitting distance of the all-time highs, rallied back in that, you wouldn't expect that a bunch of like, super blue, well-known brand name Peter Lynch type companies would look like this. And so, I shop at Target like every couple of months. I mean, the funny thing is, for me, it's all about convenience. Like whatever the closest store is the one that I go to the most frequently. So Target happens to be a pretty good distance. Well, Target's 15 minutes away, maybe 20, and so go there once in a blue moon. But go to Walmart a lot more often because Walmart's 5 minutes away. So um, let's look at Walmart. Yeah, pretty amazing. So I don't know what Target's doing wrong, but Walmart looks pretty good here. Anyway, there was some earnings, like we're right in the middle of earnings season. Before I forget, look at Robinhood. You remember the hype surrounding this IPO? Like Robinhood IPO'd and it was a big deal and all that. And there's a lot of these things. There was another stock called Upstart that just released earnings. I mean, it's down 28% today, but look at this thing. It IPO'd, you know, around the pandemic, and it's like an AI finance company or something. But anyway, look at this thing. I mean, it IPO'd at, well, I don't know what that price is, but it ran up to $400, and then it's like the dot-com bubble. This is what the typical chart of a dot-com bubble bursting stock looked like. Look at this thing. I mean, even this this latest price action here, for this thing to be down 28% just today is amazing. And then I started thinking about all these other ridiculous stocks that, IPO'd back in the day. Look at Peloton. You remember all the hype about Peloton? I mean, it was just incredible amount of hype, and they would talk about it. So there's a lot of fad stocks over the years. I mean, I've been doing this a lot of years, and so I can go back and I can think about, all the different fad type stocks. Remember GoPro and Ambarilla? That was a fad type of thing. And then there was the rare earth metals, sort of bubble or fad or whatever, wherever they talk about rare earth metals, and there was Molycorp and all that stuff, and I mean just so many of them over the years. 3D printing, remember that? 3D printing was going to change the world, and I mean just on and on. Like it seems like there's always, and then of course there was during the pandemic there was the work from home, stay at home things like this Zoom. There's another stock that is kind of. I saw a statistic the other day that said something like, 70% of over long, long periods of time, and I'm just basically saying this from memory, something like 70% of stocks over long, long periods of time end up, being losers, right? Like you're not going to make any money off of them holding them. So, um, the market itself, some of these stocks are just, they're never, I said this a long time ago, here's a stock that is never, ever, ever going to recover. I shouldn't say that, but it's probably true. It's like if you look at Citigroup on a monthly chart, here's a stock that's Citigroup's never going to hit another all-time high. probably in our lifetimes or my lifetime for sure. Because, when 2008 hit. Speaking of which, here's another one that this mystifies me. Like, I don't really. I remember many, many years ago, there was some sort of, and this could have been 10, 12 years ago, there was some sort of special on CNBC about, it was some milestone thing, and they said that the number one performing Dow stock, if you go back to, the Buttonwood tree or whatever, was Boeing, right? And so when I was looking through charts recently and I pulled up a long-term chart of Boeing, and quite frankly, I mean, Boeing got crushed during the pandemic and it's never recovered, which is, there's a monthly chart. Let's look at the weekly chart. Seems a little seems a little odd to me, quite frankly. And like I say, I don't, I can't dissect the fundamentals for you and explain why Boeing, um, is way down here. I honestly can't, but it's just strange. It's odd, and so I guess my point is, and here's another good one. I just want to real quick. I just want to look at Intel because Intel's in the Dow, right? And so this is kind of, to me, the difference between Intel and Nvidia explains why a lot of stuff in the market is just arbitrary, right? So Intel's in the Dow, and I mean, look at this sell down here. I mean, this thing was, was 60 over $60, and it went down to 25, and now it's trying to bounce back up. If Nvidia was in the Dow, right, instead of Intel, so whenever I remember when they put Microsoft, I remember when they put Microsoft and Intel in the Dow, and that was back during like the dot-com bubble, if I'm not mistaken. I remember that they put them in at the same time. But anyways, what would the Dow be at if they had substituted Nvidia for Intel? The Dow would probably be at 50,000 or something. So it's just, there's a lot of arbitrary stuff in the market, but you have to kind of pay attention to the breadth of the market, the new highs and the new lows, and quite frankly, it's no mystery to anybody that follows this stuff that it's an extremely narrow market, and as being held up by a handful of stocks. Most stocks are underperforming. It feels to me like the risk is still to the downside. I mean, I'm really torn on this. Quite frankly, I couldn't, it's a coin flip because there's a big long list of problems and things that could go wrong and reasons why this market, it could fall apart in an instant. Like we saw that crazy rally last week just out of the blue that nobody was expecting. Well, it's a good thing that didn't happen to the downside because it makes me nervous when I see certain periods of time where the market's like really tanking. It makes me nervous because there's repercussions from that. So it's not just as simple as hey, the market's tanking. So it's actually kind of a good thing that it's holding up, right? And of course, there's a debate about whether we're going to get a recession or a soft landing, whether the Fed's done raising rates, all that kind of stuff. There's all that going on, but quite frankly, we're better off that the market's not tanking. Not breaking this trend line and all that. But here's the thing. A lot of people, what's going on in the Middle East or whatever is like a big, it's a big thing. But what makes me nervous about it, not quite frankly, I don't talk about it or follow it or, take sides or anything like that because, I despise politics for one thing. And I'm just not informed enough to be spouting off opinions about anything. But here's the thing, is what bothers me is that we have sent all this military equipment over there, aircraft carriers and submarines and just we've sent all this stuff, and so have like all these other countries. And so what makes me nervous is that the the potential for something out of the potential for like the proverbial black swan is I just saw last night. I saw last night on my news feed about someone was trying to shoot sink one of our ships with the rockets, and so that right there ought to make everybody nervous because the potential for something like that to happen is extremely high right now. And so that's the kind of, that's the proverbial black swan that nobody sees coming. But, as soon as you send, all these countries sending all their, warships to the Middle East, that's got to make me nervous as far as, and so, if nothing happens, which hopefully nothing will happen, and tensions will simmer down, and I've seen things about I've seen things recently about maybe the Ukraine Russian war being over, and so that was the big sell off from the all time highs. That's what sort of kind of came out of the blue. And the funny thing is, everybody knew. You remember way back here at the end of 2021, there was all this news about Russia was amassing troops on the border and this and that. And so it's funny, man. It's like the pandemic. Back here, before the pandemic sell off of 35%, in like a month leading up to that, everybody knew that there was a pandemic in China, and there was videos of people dropping over in the streets and all that, and they were like, oh well, we don't have to worry about it here. But everybody knew that was happening, and the market literally shrugged that off for like a month, 6 weeks or whatever. um and it was just crazy. It was crazy to me at the time because I was thinking to myself, geez, they got this COVID thing happening in China, and I'm watching videos of people, dropping over, keeling over in the streets, and they're spraying all this stuff and going crazy. And everybody here was acting like it was no big deal, and then all of a sudden it was a big deal, and the market sold off 35%. And then over here at the end of 2021 and all that, you can see the market had this, huge run up, and it was bouncing around over here. And meantime, they're like, Russia's getting ready to invade Ukraine. They're amassing troops and this and that, and everybody knew that, and it didn't matter. And the market kept, holding up, and it even rallied to new all-time highs. Then Russia invaded Ukraine, right, and the market tanked. And so, all I'm saying is that there's two recent instances of stuff that we knew was happening, but the market, pretended it didn't care, and then all of a sudden, like one day, it mattered, right? And so where we are right now is, of course, we're not, both of those other instances, the market was at all-time highs, right? And so here we are right now. Market seems to be holding up pretty well, and there's a lot of potential for stuff to happen. I see all this World War III stuff, and I'm not sure how serious I take that. But anyway, there's potential for something to go wrong when you got 11 countries putting all their military equipment in the Middle East in a small area or whatever. If there's an accident or something, if something goes wrong, then can't say that we weren't warned, because everybody knows what's going on over there. So anyways, it makes me nervous from a purely objective standpoint. The market, if there is no black swan and nothing bad happens, and and then of course we haven't even talked about recession and this and that, but we might be able to, here's 2024. We might be able to like muddle through here for the rest of the year. People are going to start thinking about Thanksgiving and their Christmas shopping and that, but I can assure you that people are going to cut back. I see this all day, all the time, about these young people talking about how they can't afford well, obviously they can't afford homes, but they can't afford food, and the price of everything's gone up so much that they're struggling and this and that, and quite frankly, I mean, with food prices having gone up so much, and restaurant prices and that, people are cutting back. That's what inflation does. Luckily and fortunately, the price of gas in I don't even understand this. I mean, it was over the summer. I remember gas was like 379 or whatever, 369, 379, and now it's 319, 329 or something. Kind of fluctuates, and so I don't know if that's the result of emptying the strategic petroleum reserve, but the price of oil's been coming down. So that's a good thing. That will help with inflation, but the whole like emptying the strategic petroleum reserve thing's kind of funky to me. I don't know what the repercussions, but I do know that oil's like it's 70 something dollars a barrel, so seems like it would make sense to start filling it back up. I saved the news article that said in 2019 the United States was energy independent for the first time in well, forever or whatever. I guess that we actually produced enough energy to so it seems kind of strange, this whole thing about emptying the strategic petroleum reserve or bringing it down. So anyway, it would make sense to fill it up with oil in the 70s, but um I saw something recently where Oppenheimer lowered their year-end price target. Oppenheimer, the guy was on TV like about a week ago, a couple weeks ago. He had a year-end price target of 4,900, which is up here, and he lowered it to 4,400, which is like right about where we are. But he did that back over here. when we were at 4,100, he lowered his price target from 4,900 to 4,400, and then like a week later, here we are. So that's kind of interesting. But um, it seems to me like year-end price target that we're going to probably land somewhere right about where we are now, I would say. I mean, year-end price target 4,500 would seem like the high end. Um, maybe we get another little pullback. It wouldn't surprise me if we're going to get another pullback. It wouldn't surprise me to see it kind of come back down to about 4,300. So, at these prices here, at these levels, the S&P, geez, 4,600, 4,100. Now we're kind of right in the middle of that. And so, you can see there's still quite a few weeks left in the year. And so anything could happen, but I would be I would be surprised if the S&P was above this trend line or below this trend line by the end of the year. And so I mean, that's an insane range to say that, but um, so that guy from Oppenheimer, even though he raised his price target to 4,900, um, he raised his price target to 4,900 and then he lowered it to 4,400 and this and that. He's probably like right about the market's probably going to end the year, probably right, about where we are now, I would have to guess. It's going to be interesting to see what it does in between, and obviously these weekly bars can do a lot, so it'll be interesting to see what happens. But anyway, year-end price targets are on Wall Street are a complete joke because they come out with I think it was last year. Like last year in 2022, the beginning of the year, or maybe even I guess it would have been December of 2021. They had these crazy price targets. I think Tom Lee 5,100 or something, and it ended the year at 3,800 or something like, or yeah, 3,800 over here. So last year was sort of an anomaly, right? We talk about the Santa Claus year-end rally. Well, off the October lows, it got a pretty good bounce and then a big sell-off like into the end of the year. So keep that in mind too. Last year was kind of an anomaly. I mean, the market was down significantly, right? Usually it rallies at the end of the year, but and I forget what was even going on. I guess it was the Fed raising rates or whatever. So if the Fed somehow or other loses control of inflation, if we get a second round of inflation, um, it's going to be ugly. Put it that way. And we haven't even talked about this whole new thing about the debt and the interest on the debt and all that stuff. And nobody's talking about the government shutdown. I guess they'll wait till next week to start talking about that because it's like literally like 9 days away. They have to like pass another thing or whatever to keep the government open, which is like 9 days away. And I'm not hearing anything about that. So crazy times we live in, that's for sure. So anyhow, I'm gonna wrap this up. Don't want to keep talking your ear off. I mean, there's so much potentially to talk about, but it is what it is. I mean, we've got our levels, we're right up against resistance. This short-term pattern may turn into a big inverse head and shoulders, and then we'll just have to see what happens. So anyhow, thanks for tuning in. I'll see you back here same time next week.